Several weeks ago, Dr. Michel Léonard visited with me to share his views on the impact of current economic conditions on the insurance ecosystem. Michel, it's great to have you back for a forward-looking conversation about the economic outlook ahead and what it might mean for insurers, insureds, and public policymakers.
Great to be
here.
Here
we are in the middle of November 2025. Michel, looking ahead to the new year, what do you foresee from a macroeconomic perspective? And again, thank you so much for being with us.
Well, it's always a great pleasure to not only spend time with you, but obviously with your audience. Interest rates, interest rates, interest rates. That's the most important thing for us in the industry. Why is that? Because first, we're waiting for a rebound in housing. Once the capacity, there's more housing starts, there's going to be more people redoing their bathrooms and all of that, kitchens. We're waiting for that. Then on the other side, we're also waiting for the impact of interest rates on condos and co-ops. So this will impact both homeowners, condo specifically policies, but also commercial. Because when we look at these A-class conversions, especially in the Sun Belt, that are waiting to become condos and so forth, at one point in this process, they're going to be on renters insurance, they're going to be on commercial policies, and there's always the master policies as well on these condos.
Thank you, Michel. I want to delve a bit more deeply into some specific components influencing your forecast as we look a couple of steps down the road. Where would you like to begin there? You want to drill down just a little bit for our audience?
Well, I think the first thing is, again, monetary policy, monetary policy, monetary policy. Now, what drives monetary policy? Let's start there. It's growth, it's inflation, and it's employment. So let's look first at growth. Growth is under stress, but resilient. What's the stress for? Performative policy, specifically when it comes to growth and when it comes to tariffs. So we're concerned about that. Changes on an ongoing basis. So far, there seems to be some relief in terms of what to expect, especially on primary consumption goods, food, etc. So we'll see where that goes. Right now, though, the main impact of those tariffs for us, again, in insurance is homeowners' content, because there was just a significant amount of tariffs put on Southeast Asia, which exports most of our furniture, most of our clothes, garments, footwear, and all of that. Second one, inflation. Well, that goes kind of together there. It's always, this is where, by the way, the one hand, I'm going to make it fit in the screen, one hand and the other, on one hand and on the other. This is where it comes from. It's not about it's not about not answering the question, as quite often we see. It's about, what are the risks to the upside and the risks to the downside. Inflation is the upside, growth is the downside. And those right now are pretty much concerned. The Fed will probably cut again, which frankly, on the weakness of the numbers or the strength of GDP, I'm a bit surprised about that. And then there's employment. We in insurance are resilient when it comes to employment. We are continuing to add, though at a decreasing pace, and we are outperforming, as we often do in terms of underlying growth and employment, the wider U.S. economy. So employment is still resilient as well.
And Michel, for our audience of public policymakers, given all that you've shared, can we talk a little bit about practical implications of your forecast as we look ahead? And what might that mean for public policymakers concerned with the operation of the insurance ecosystem?
I think this is affordability, affordability, and affordability. Not from the perspective of the industry only. Yes, our combined ratios are challenged. Yes, it's challenging for us, using the word twice here, to continue to provide coverages, especially in high-risk areas, whether it's extreme weather events mostly, or whether it's legal system abuse and some of these other considerations. But affordability is going to be the one thing that is on everyone's mind, especially given for your audience, regulators and legislators. They're going to hear a lot from their constituents. And we thought we were out of the tunnel there. We had multiple years where we had to have, as an industry, across especially personal lines, homeowners, and personal auto, back-to-back increases, in some cases double digits and so forth. We thought finally working with regulators, especially, that we had gotten in a place where we had reached an equilibrium between increasing prices on one hand and on the other hand, premium and maintaining our policyholder surplus. With the tariffs, that could change. So this is where really we want to look going into 2026 for regulators and anticipating. We're working with Griffith, working with III, how to get in a place where, on one hand, I'm being an economist this morning, one hand and the other hand constantly here, Frank, but where legislators and regulators and the industry can work with the consumer advocacy groups and try to find something that is best for everyone.
Thank you, Michel. Just a couple of additional questions for you, and we appreciate you visiting with us. Can you speak to any plausible black swan-like scenarios that might disrupt your forecast, and what influence might we perhaps see on the insurance ecosystem? Anything that could be done to prepare for any potential black swan events? What do you foresee, if any, there?
Well, you've heard me say this. I try to stay away from black, white, pink, and all these different swans. There's a story that in the UK, the Queen, the King owns all the swans, so I try to leave them to the monarchy. That said, equity markets, if there's a significant correction there, that would impact the whole economy. The fact that the economy is resilient, yes, weak, or weakening, that's a concern. We've seen this in the past, specifically the AI boom on the debt side, not just on the equity side, but bringing it back to us, our access to capital, our ability in the industry to get global capital and to compete for that, and our ability to ensure that profits, especially from reinsurers or syndicates at Lloyd's or the Bermuda market, are able to repatriate their profits. Why am I saying that? Traditionally, when there is a protectionist environment, first governments will look at goods, agriculture, and so forth, but then they also get to capital controls, specifically profit repatriation. So I would say that a true black swan, very dark black swan, would be this concern there about profit repatriation and what it means for regulators, legislators, and for carriers in their ability to continue to provide affordable coverage in those high-risk areas when it comes to extreme weather events. Because reinsurers from abroad coming in specifically through MGAs in areas like California has been or are truly a solution, part of the solution to the problem of affordability and availability in these high-risk markets. Again, California, for example.
Michel, thank you very much. A final question for you. Given all that we've discussed, what do you believe to be some of the key questions that should be top of mind for public policymakers as we head into the new year?
I'm sorry, but I'm going to sound like a broken record. Affordability and availability. This is what, whether they're elected or appointed on the regulatory side or on the legislative side, this is what we're going to hear at the city council level, at the state level, and at the federal level. Of course, we're mostly regulated at the state level, but this can come up in terms of what's going on in Capitol Hill. Affordability and availability and the narrative, the messaging, the talking points. How do regulators, legislators look at this to really find a solution? And I don't think that simply saying, oh, the insurance industry has had challenging combined ratio. That's our problem. We were very profitable last year. Thanks to getting a new equilibrium. It's good for us to be in a place where profit for us means reasonable. That's legislated, that's regulated, but it also means that we're able to make sure we're there to pay for those claims, which we want to be. So again, working with Griffith, working with III on being able to find constructive solutions, not just thought leadership, but constructive solutions to the problem of availability and affordability.
Dr. Michel Léonard, thank you for visiting with us. We appreciate you sharing your insight with our audience.
It's my pleasure as always.